What if the greatest investor of all time just told you to avoid real estate completely? Warren Buffett, the man who once said he would buy hundreds of thousands of homes if he could, has now completely changed his tune. At his latest shareholder meeting, he delivered what might be his most shocking warning yet about the housing market. This is the same Warren Buffett who has beaten the stock market for 60 years straight, the same man who turned $10,000 into $500 million. And now he is telling us that buying a home could be one of the worst financial decisions you can make. But here's the really scary part. Most people have no idea why he changed his mind, and they are about to make a massive mistake with their money. So what exactly did Warren Buffett discover about the housing market that made him issue this warning? Why does he now think stocks are so much better than real estate? And most importantly, what should you do with this information right now? Stay with me because what you are about to learn could completely change how you think about building wealth. By the end of this video, you will understand exactly why Warren Buffett believes real estate investing has become a trap, and why he thinks there is a much better way to grow your money. Let me start with what Warren Buffett said that shocked everyone at his recent shareholder meeting. When someone asked him why he does not buy more real estate, his answer was brutally honest and probably not what you expected to hear. Warren Buffett looked at thousands of people and said that real estate is so much harder than stocks. He explained that when you want to buy or sell stocks, you can do billions of dollars worth of business in just 5 minutes, completely anonymous, and the trades are done instantly. But with real estate, everything becomes a nightmare of negotiations, time, and complications. Think about this for a moment. Have you ever tried to buy or sell a house? How long did it take? Warren Buffett pointed out something that most people never consider. When you buy a property, you are dealing with a single owner who sees selling their home as an enormous emotional decision. This means every transaction becomes a drawn-out process that can take weeks or even months. But wait, it gets even more complicated. Buffett explained that in real estate, when you think you have made a deal, people start negotiating more things and more things. First, you negotiate the price. Then you do inspections and negotiate credits or repairs. Then you negotiate with the escrow company, then with contractors. It never ends. Compare that to buying stocks where you click a button and you are done. No inspections, no repairs, no wondering if the deal will fall through. Warren Buffett has built his wealth on being able to make quick decisions and move fast when opportunities appear. Real estate makes that impossible. Now let me tell you something that will probably surprise you about Warren Buffett's track record. Over the past 100 years, home prices have increased an average of 4.3% annually. But during that same time, inflation averaged 3%. This means that if you just bought a random house and held onto it, your house would only beat inflation by 1.3% per year. That sounds terrible, right? But here is where most people think they have found the secret to making real estate profitable. Rental income. The average home typically generates about $3,000 a month in rent for every $500,000 of value. After you pay property taxes, insurance, maintenance, repairs, and deal with vacancy, you might make an additional 2 to 6% every year. And then there is leverage. If you put $50,000 down on a $500,000 home and it goes up to $600,000, you did not just make a 20% return, you made a 200% return on your initial $50,000. That sounds amazing, does it not? But Warren Buffett sees through this illusion, and here is why. He pointed out that most people never account for the time it takes to make real estate work. Think about all the hours you spend finding the right property, negotiating the purchase, dealing with inspections, managing ongoing repairs, handling tenant issues if you rent it out. It is exhausting and it never stops. Warren Buffett compared this to the stock market, which has averaged 9.8% per year since 1928 with dividends reinvested. And here is the beautiful part. This requires no work, no management, no borrowing, and no dealing with tenants calling you at midnight about broken toilets. Just imagine this scenario. Instead of putting $50,000 down on a $250,000 home in 1995, what if you had invested that money in the S&P 500 index? That investment would be worth over $940,000 today. The house? Even with rental income, it would probably be worth around $840,000. and that does not account for all the expenses like maintenance, property taxes, insurance, and repairs. So when you look at the hour per hour value of your time, Warren Buffett argues that stocks are generally the clear winner. But here is where his warning gets really serious. Warren Buffett has been watching the housing market very carefully, and what he sees now terrifies him. In his recent shareholder meeting, he explained that large amounts of real estate have changed hands at bargain prices during market downturns, but usually stocks were even cheaper and much easier to buy. This brings up a crucial point that most people miss. Warren Buffett said he would have been interested in buying real estate back in 2012, right after the housing market crashed and prices had fallen 30 to 50%. Interest rates were at record lows, and you could get a 30-year mortgage for around 3%. But look at today's market. Home prices are at all-time highs in most areas. Interest rates are over 6%, and some experts think they could stay there for years. The math that made real estate attractive in 2012 simply does not work anymore. Warren Buffett is essentially telling us that real estate was only a good investment during very specific conditions, when prices had crashed and interest rates were super low. Those conditions do not exist today. In fact, we might be facing the opposite situation. Here's something that should really concern you. Warren Buffett mentioned that when you buy stocks, you can do business totally anonymous and complete transactions in minutes. But with real estate, you are dealing with a single owner who sees this as an enormous emotional decision. This emotional component makes real estate markets much less efficient than stock markets. What does this mean for you? It means that real estate prices can stay artificially high for much longer than they should, because sellers refuse to accept reality about what their homes are actually worth. In the stock market, prices adjust quickly to new information. In real estate, it can take years for prices to reflect true market conditions. Warren Buffett also pointed out something that most real estate investors do not want to admit. He said there is just so much more opportunity in the securities market than in real estate, at least in the United States. Think about what this means coming from someone who has studied both markets for decades. In the stock market, you have thousands of companies to choose from across every industry and every size. You can invest in growing companies, dividend-paying companies, international companies, or broad market index funds. You have unlimited options and unlimited liquidity. But with real estate, you are limited to properties in your local area or maybe a few areas you know well. Each property requires massive amounts of research, due diligence, and ongoing management. You are essentially putting all your eggs in a very small basket. Now let me share with you what might be Warren Buffett's most important insight about real estate investing. He explained that most people make most of their money in real estate when they buy, not when they sell. This means you need to be an expert at finding undervalued properties and negotiating great deals. But here's the problem. How many people do you know who are actually expert real estate negotiators? Most people buy homes at market prices, maybe even above market prices in bidding wars. They are not getting the deals that would make real estate a great investment. Warren Buffett can get great deals in the stock market because he understands businesses better than almost anyone. But for real estate, you would need to understand local markets, construction costs, rental demand, zoning laws, and dozens of other factors. It is like becoming an expert in a completely different field. This brings me to one of Warren Buffett's most famous pieces of advice that applies perfectly to this situation. He always says to invest in what you know and understand. For most people, that means avoiding real estate investing and focusing on simple, broad market index funds. Warren Buffett has said many times that for most people, the best thing to do is own an S&P 500 index fund. This gives you exposure to 500 of America's largest companies across a wide range of industries. You get instant diversification without needing to become an expert in any particular business or industry. But wait, there is more to Warren Buffett's warning that you need to understand. He is not just saying that stocks are better than real estate. He is warning about specific conditions in today's market that make real estate particularly dangerous right now. Remember, Warren Buffett said he was interested in real estate in 2012 when prices had crashed and interest rates were super low. Those were ideal buying conditions. Today, we have the opposite. prices at record highs and interest rates much higher than they were during the best real estate buying opportunities. Warren Buffett is famous for saying, "Be fearful when others are greedy and be greedy when others are fearful." Right now, many people are still greedy about real estate, convinced that prices will keep going up forever. This is exactly when Warren Buffett becomes fearful. Here's something else that should worry you about today's real estate market. Warren Buffett pointed out that real estate transactions involve multiple parties and complex negotiations. In today's market, with prices so high, these negotiations have become even more complicated and risky. Buyers are stretching themselves financially just to afford homes. Sellers have unrealistic expectations about what their homes are worth. Lenders are dealing with higher interest rates and stricter lending standards. All of these factors make real estate transactions more likely to fall through or result in bad deals for buyers. Warren Buffett sees all of this happening, and he is basically saying, why deal with all this complexity and risk when you can invest in the stock market so much more easily and probably get better returns? Now, let me tell you about something that Warren Buffett mentioned that most people completely missed. He talked about how real estate markets are much less liquid than stock markets. This might sound like a technical detail, but it has huge implications for your wealth. When you own stocks, you can sell them instantly if you need money or if you think the market is about to crash. But when you own real estate, selling can take months, and you might be forced to accept a much lower price if you need to sell quickly. Warren Buffett values this liquidity very highly because it gives him flexibility to move his money when better opportunities appear. If you have most of your wealth tied up in real estate, you lose this flexibility completely. Here's another crucial point that Warren Buffett made about real estate investing. He said that even when real estate markets crash, stock markets usually fall even further, creating better buying opportunities in stocks than in real estate. Think about what happened in 2008. Yes, real estate crashed, but the stock market fell even more. If you had money to invest during that crisis, you would have made more money buying stocks at the bottom than buying real estate at the bottom. Warren Buffett is essentially telling us that if you are waiting for a market crash to buy assets cheaply, you should focus on stocks, not real estate, because stocks will probably offer better bargains. But here's where Warren Buffett's warning becomes really serious for ordinary investors. He pointed out that most people do not have the skills or knowledge to pick individual stocks successfully. Even professional fund managers usually fail to beat the market over long periods. So what does Warren Buffett recommend instead? He has said many times that most people should just buy a low-cost S&P 500 index fund and hold it for decades. This strategy requires no special knowledge, no ongoing management, and historically has produced excellent returns. Compare this to real estate investing, which requires you to become an expert in local markets, property management, tenant screening, maintenance, legal issues, and dozens of other complex topics. For most people, this is simply not realistic. Warren Buffett is not just comparing real estate to stock picking. He is comparing real estate to the simple strategy of buying and holding index funds. And when you make that comparison, real estate looks much less attractive. Now let me share something that Warren Buffett said that should terrify anyone thinking about buying real estate right now. He mentioned that the appeal of real estate in 2012 was partly due to low interest rates fixed for 30 years. At 3% interest rates, borrowing money to buy real estate made a lot of sense. But today, mortgage rates are over 6%, and some experts think they will stay high for years. This completely changes the math of real estate investing. Higher interest rates mean higher monthly payments, which reduces your cash flow if you're renting the property out and makes it much harder to justify the investment. Warren Buffett sees this change in interest rates as a fundamental shift that makes real estate much less attractive as an investment. He is basically warning us that the conditions that made real estate a good investment in the past no longer exist. Here's something else that most people do not consider about Warren Buffett's real estate warning. He talked about how real estate deals involve ongoing negotiations even after you think the deal is done. This creates constant stress and uncertainty that does not exist with stock market investing. When you buy stocks, the transaction is clean and final. There are no inspections that might reveal problems, no last-minute demands from the seller, No financing issues that could kill the deal. You know exactly what you are getting and exactly what you are paying. This certainty and simplicity is incredibly valuable, especially in uncertain economic times. Warren Buffett prizes this simplicity because it allows him to focus on what really matters, finding good investments at reasonable prices. Let me tell you about one more crucial aspect of Warren Buffett's warning that most people miss. He emphasized that there is so much more opportunity in the securities market than in real estate. This is not just about returns, it is about the number of opportunities available to you. In the stock market, new opportunities appear every day. Companies report earnings, economic conditions change, new industries emerge. If you miss one opportunity, there will be another one tomorrow. But in real estate, good opportunities are rare, and you might wait months or years to find the right property at the right price in the right location. And if you miss that opportunity, you might wait a long time for another one to appear. Warren Buffett succeeds by being able to evaluate many opportunities quickly and choose the best ones. Real estate investing makes this impossible because each property requires so much time and effort to evaluate. Now let me address something that real estate investors always bring up when they hear Warren Buffett's warnings. They say, but Warren Buffett, you need somewhere to live anyway, so buying a home makes sense even if it is not a great investment. Warren Buffett would probably agree that buying a home to live in can make sense under the right conditions, but he would also point out that there is a huge difference between buying a home to live in and buying real estate as an investment to build wealth. If you are buying a home to live in, you should focus on affordability, location, and whether you plan to stay in the area for at least several years. But you should not count on that home to make you wealthy or provide your retirement income. For building wealth, Warren Buffett is clearly saying that simple index fund investing is a much better strategy for most people. It requires less money to get started, less ongoing effort, and historically has produced better returns with much less risk. Here is what I think is the most important part of Warren Buffett's warning. He is not just saying that stocks are better than real estate in general, he is warning us about the specific conditions we face right now that make real estate particularly dangerous. We have home prices at record highs, interest rates much higher than they were during the best real estate buying opportunities, and a generation of people who have never experienced a real estate market crash. This combination of factors creates exactly the conditions that Warren Buffett tries to avoid. Warren Buffett becomes interested in assets when they are cheap and unpopular, not when they are expensive and everyone wants to buy them. Right now, real estate is expensive and popular, which makes Warren Buffett very cautious. So what should you do with this information? Warren Buffett's advice is surprisingly simple. For most people, the best strategy is to buy low-cost index funds, hold them for decades, and let the power of compound growth do the work. This strategy requires no special knowledge, no ongoing management, no dealing with tenants or repairs, and no worrying about whether you can sell quickly if you need to. It is simple, effective, and historically has produced excellent returns. If you absolutely must buy real estate, Warren Buffett would probably tell you to wait for better conditions, lower prices, lower interest rates, or both. Do not get caught up in the fear that you are missing out or that prices will keep going up forever. Remember, Warren Buffett has seen many market cycles over his 60-year career. He has seen real estate booms and busts, stock market crashes and recoveries. His warning about real estate is based on this deep experience and understanding of market cycles. The bottom line is this: Warren Buffett is telling us that for most people, real estate investing is harder, riskier, and likely to produce lower returns than simple index fund investing. This might not be what you want to hear, especially if you have been dreaming of building wealth through real estate, but it might be exactly what you need to hear. Warren Buffett's track record speaks for itself. He has created more wealth through investing than almost anyone in history. When someone with his experience and success issues a warning about real estate, we should probably listen. What do you think about Warren Buffett's warning about real estate? Have you been considering buying property as an investment, or do you think index fund investing is the better path? Let me know in the comments below, and make sure you subscribe for more insights about building wealth the smart way. Remember, the goal is not to get rich quick. It is to build wealth steadily over time using strategies that actually work. Warren Buffett has shown us that sometimes the simplest approach is also the most effective. Thanks for watching, and I will see you in the next video where we will explore more wealth-building strategies that you can actually use.